Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. How we doing this morning? Hope you guys are doing okay with the volatility. We have, of course, a lot to go over today. I hope those of you who are in the TraderLab or are visiting in YouTube watched yesterday's stream. It is very important to understand market mechanics. How does the market work? Why does it do what it does? And how, at times, you can get in alignment with it. And the thing is, in my opinion, and this is probably one of the primary elements, think like a retail trader, but don't act like one. Think about your impulses, think about what you expect from the market, but in trading, it's not what we think it is, only what we do. And our job in the market, in my opinion, is alignment, not prediction. There's no such thing as how high or how low can the market go. It'll go wherever it goes until the participant behavior changes and the market gets out of balance. In other words, it gets too long or too short, and that creates our rotations. So in all time frames, as you want to call it, the market rotates over itself, whether it's short time on an intraday basis or if it's higher time frame. The market is always rotational. So even though it can appear directional, which it is, inside of that direction are rotations. So we absolutely operate in a multiple time frame configuration. So the idea as a day trader is to kind of carve out the rotations or time frame you operate in, use potentially vetted trades, and you can get those to work on in the TraderLab, and then reverse engineer and find out where you have a statistical edge. Now remember what our job is as traders. Most of us get all hung up in the psychology, which is being right, predicting, can't go any higher, can't go any lower. It has nothing to do with trading. It really doesn't. Do you really know what trading is? Here's what trading is. At least I'm going to try to distill it down in a simple concept for us, for all of us. Our job, if we have a statistical edge, is just to show up and put that trade on that has the edge. So it's not about a right or wrong thing. All we're doing is really taking samples of the market, and the only way we extract the statistical edge that favors us is to actually put the trades on. So instead of a right or wrong, which doesn't exist in this business other than executing a statistical edge, which is right, and following your plan, which is right, anything outside of that, I'm going to go out on a limb here and say it's wrong. Because the only way you extract an edge, and you absolutely have to have one, is to take the trades so you get the samples, so you extract the edge. And you are going to pay the gamblers. That's just part of extracting the edge. So what is your job? Structured trades, vetted locations, risk, and over time, with discipline and actually having an edge, the dollars will flow to you. End of story. That's the business. Now, how do you get to that? That's what the TraderLab is about. Okay? Hope you get something from this today. Thanks for visiting the TraderLab. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific recommendations or advice or investment advice. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. This is based on structured trades. These trades are available to all of you in the Bookmap Discord TraderLab community. There is a link in the bottom of YouTube if you're inclined. There's no cost for it. Basically, what we are doing here is very simple. We're using something called auction market theory, which is very simple. It's shopping. So you know how to shop? This is how the market works. It's not any more complicated than that, but here's what it is. It's random. So when you think of complexity, just be sure you define it correctly. Randomness. It is not complex. It is random. So as the market changes, we need to have codified and defined before we ever put a trade on what the condition of the market is, and also change. Now, you won't know about change until hindsight, so we have to get over it. Sorry. No prediction here. It's alignment. So the auction is what's too high, what's too low, what's fair. And the thing about the auction is if you find a price that becomes unfair, then what's going to happen? We're going to leave it, whether it's above us, below us, or somewhere in between. And it happens in all time frames. The tool to see that is a volume profile. It's not an indicator as the standard indicators. It's really just a representation of price and volume. The reason it's very useful is because prices are not created equal. You know, if you look at a candle, you know, what do you know about that candle? Well, what happened inside it? You can't see that. So the profile, and by the way, most candles are time-based. They don't have to be. They can be anything you want them to be. But volume is just volume profile. There's no time. Now, the time is the time frame. Now, if you use the clock, it is a time frame. Going out on a limb here. But let's say you don't use the clock. You use rotations instead. So it's not time, it becomes rotations. And it's whatever it takes to create the rotation, you see? So it doesn't have to be time-based, though time is an element naturally. And then the context. This is a hard part for us because let's say the trend is down, but we can be long, right? Or the trend is up and we can take counter trend trades. Or the trend is up and we're only taking longs, or the trend is short and we're only taking shorts, or any combination. So in your trade plan, you have to already know the condition of the market as you define it, and then take the trades that have edge that you've defined, vetted, and then have the discipline to show up, put the trade on, take your stop, or whatever happens, because it's the only way you can get this edge extracted is taking the samples. So all of this seems to be all of this context question is really related to a vertical integration of time frames. And then Bookmap's the order flow tool. This is where we get down to the microstructure, and then we try to read the market at locations that we have vetted, look for triggers, and then put our risk on and take the outcome. That's as deep as this gets. Now, the randomness is a problem, right? Because that creates the psychological impediments because of our fear. That randomness is and the pain that comes from taking a stop, and it is pain. You are wired to avoid pain. Have you ever burned yourself? Let me ask you, after you burned yourself, probably as a kid somewhere along the line, you know, don't touch the stove, don't touch the hot pot, and you might do it. You might not do it again because now you've trained yourself to recognize potential pain, so you avoid it. Same here. So taking a stop is painful. So what does your wiring do? Avoid pain. Don't put your hand in the fire. Let's be certain it's not hot. Well, it doesn't work here. There's a problem for us. By the way, there's 60 PDFs of structured trades. I've shared these in TraderLab. They're available, as well as a library of webinars. It's in the chat in the TraderLab community. You can download these, but these are not plug and play. By now, you might know that trading is not plug and play. How many of you out there have done plug and play? And you still get winners, by the way. Why is that? Because everything has winners. There's randomness and slop. So the thing isn't not the random winners. It's really about understanding randomness and edge, and not participating unless you have what? An edge. Otherwise, you're sitting with the gamblers, and I always say, be sure to get the coupons and the ticket to the buffet. Now, here's the higher time frame. Now, you'll notice, let's talk about yesterday. Yesterday, we opened lower, and I'm trying to remember what we had over here. There was a level right down here. It was, I think, ETH low. I can't remember anymore. It was either here or down here. Can't remember. And this is a key level right here. This is the over-under, if you remember. So as we've come down here, we found our buyers, we found our buyers, we found our buyers. So what we did in the ETH, I believe, can't remember anymore, we got under here, tested this, and that set up the squeeze. And then the shorts that are sitting in here, any shorts from here. And the shorts, because of the war, I call this the war squeeze. Really, this is really something you will see quite often because retail traders sell the news. Well, professional traders, while we all take stops, we understand market mechanics. How does the market work? Well, if we have, let's just use an example. We have sellers here, sellers here. We open lower. We get sellers here. What happens? Potentially. Squeeze. What happens to the shorts here? Hasta la vista. What happens to the guys up here? Well, we went for it. We didn't get it. Here we have selling. What happens here? We get new sellers. What happens to them? Under the bus. What happens to these shorts with buy stops here? See you later. Thanks for playing. Now we get our sellers. Now we have sellers in a week, and this was resistance, by the way, on this day. What do we do here? Gap lower off the war. What happens to these guys? Don't forget ETH low here. Squeeze Ethereum. Now what did we do? We took the longs. The longs came in, so now we have buyers with sell stops, and we squeezed out the shorts. So we take out the shorts, we get more fuel in. Then what do? We open under here. What does that suggest? We'll see you later. Thanks for playing. You get a coupon to the buffet. Now here's our potential targets, not recommendations. 67.30 is a target. And then we have, hold on, let me show you one other thing. Potential, that's all you got, nothing more. So 67.30 is a composite high volume node. This is like a retail price. Here's how this might work. I'm not paying that. Low volume area. Yeah, but it's on sale. ETH, right? Low. Come above here. What do? Squeeze Ethereum. Now we gap under here. What now? Well, if this is too low, we can come down to here and here. So starting out today, because we're falling out of a key location, which is bearish, in my opinion. Now, bearish until it isn't, but this is kind of the way trading works. You get aligned and then you do your thing. If the condition changes, then you might not do your thing. You might go back in the Barca Lounger, or that's it. It's subject to, again, your plan. And I always talk, when I share these concepts in TraderLab, what I have found for developing traders, this is a slow down, identify the dominant side, stay with the dominant side until your definition of dominance or levels are broken, which you won't know until hindsight, takes you off, or the dominant side changes. Now that dominant side can flip back and forth. We can, of course, squeeze. We can do anything. So the idea of what the market will do is not part of what we do. What the market might do is what we do. So this is today. So 67.30 target, and then this. So for me today, it was shorts only in the morning, going for this. So that's it. Wish I had more to tell you. That's as deep as this is. Then I just start out, and I start out taking structured trades, and whatever happens, happens. Okay, you guys with me? Okay. RTH open. Let's go. Now, this is based on structured trades. The idea of the TraderLab is to give you structure that you can reverse engineer and build into a trade plan. Trading is not complicated, in spite of what you might think of it. The trading is simple once you have a plan and an edge. What is difficult is the randomness. Okay, at least in my opinion. But hold on here. If you're hearing alerts and alarms, I'm going to try to get rid of those for you. Okay. All right. So RTH open. So this is yesterday's low. So we're opening in a gap. So what are the possibilities here? Great question. So we're opening lower outside of range and outside of value. What does that mean? Well, it means possibly go south. Now, the first thing we might anticipate when you get a gap is some responsive buying. Okay, in other words, we might, what do we have? 802? What's 802? Oh, okay. What we want to know here, do we get buyers? Or if not, what do? Do we sell because of the gap? Well, we know that potentially yesterday was a squeeze. And if we have the shorts out of the market, then when we gap lower, those shorts who got squeezed out might re-engage. And then we get the true selling. So, and for me, I thought yesterday, my plan yesterday was the short squeeze. Who knew? When you get the gap, though, now this, to me, and I'm only giving an opinion, not a recommendation, this is the real market now. So going down is my primary trade, unless it changes, of course. And if it changes, I'll take a stop or whatever it does, it does. And you got to get over it. I mean all of us. This is trading. You can't get away from what the business actually is. It's samples. All you're doing is taking a sample of a trade that you have vetted, and then when it shows up, you show up. And instead of being fearful, which I understand is our primal wiring, the job is to recognize the fear because of the uncertainty and basically put the fear on hold. Say, yeah, I anticipate fear. I'm coming to a location. If I get my trigger, I put my trade on, and because I have an edge and I have this volatility in range, there could be a really good risk reward. I know I'm going to take stops. The only way I can be profitable is to extract my edge. Where will it show up? I don't know. Do you? Well, if you don't know and you can't know, then how can you know which trades are going to be profitable or where you're going to take a stop? You can't. So if you can't know, what are you going to do about it? If you're going to be in the business, you got to sample the market and you got to pay cost of production and overhead. If you're fearful, then you don't have an edge. You're making it up. So how do you compensate for your fear? Tangibility. Fear is an emotional state. If you don't have a plan that you have confidence in that has an edge that you can measure because you have anchored inputs, then you're just gambling or entertaining yourself, whatever it is. I'm just saying, because that's the business. Can't tell you anything more about it. Okay, now let's look. So this is the RTH open, big gap. I think it's a 100-point gap, whatever it is, and or a bit more. So now it's let's get going here. So for me, what I want to do is sell it. Now the problem naturally is, where do you sell this thing? So let's look. So we get a buy sweep here, and this is the RTH open somewhere in here. I think it's covered up. There's the RTH open. This was the full set. No, actually, it's not. Full session VWAP. I don't know if this is accurate, by the way, because I had some data problems this morning myself. So let's look. So we get our RTH open. Lovely. Now let's see what we get. So I'm looking for a short. Now the problem naturally is, where do you get short? Of course. So this is my key location that I broke out of. Liquidity is here. Right here, I break high. I'm testing the breakout. I took a short here. I'm just telling you what I did. Doesn't mean anything. This was my scale, VHVN. This is a structured trade right ahead of here. And then I'm holding for the ETH low. Okay, this is a structured trade. Now, why would I do this? Great question. Because let's go back to our statistics. I'm out of value, out of range, huge gap. In my opinion, at this time, this is the quote war trade. Yesterday was just throw the shorts out. Now it's just an opinion, and it's only in the current moment. So we open lower out of range. Well, I have getting the ETH higher low is a 91% probability. I don't know about you. I'm leaning down. What about you? Getting to the ETH low is a 72% probability on its own. Getting to the previous higher low, and this is the one you got to be aware of, 68% probability. In fact, I asked in the TraderLab, what have we not done? And I didn't get the right answer. And it was, we didn't fill the gap. Now, what is that? Because we're all myopic and we're all focused in the short time frame. You cannot lose the bigger picture. Now, that doesn't mean we'll ever fill the gap. It's not about what we will do. It's being aware of behavior. And where does behavior change? I kind of created something for myself years ago, a conditional statement, and it's kind of an offshoot from when I built trading systems. So it was a condition. If the condition's true, then you run down branch logic. Certain trades are qualified. If the condition changes, so it's no longer true, then certain trades are not qualified, and either other trades are qualified or no trades are qualified, subject to your plan. Does that make sense? So we know we have also about a 64% probability to take out the first hour's high or first hour's low, and we're going to take out one of them. There's a 98% probability. Now, which one? Could be either one, could be anyone. Never know. So now we know the ETH high is pretty far away, so there's a good chance we're not going there. And there's only a 30% probability we get inside of yesterday's range to get all the way up here. Now let me try to find the ETH high. Let me try to find it. I can't find it. Guys, where's the overnight high? I thought it tested a pretty important level. 68.86. Okay, let's look at this. 86. This is the fair price from yesterday. In other words, the highest volume. Remember, auction market theory. What's this theory? It's shopping. And what the market is really trying to do, here it is figure out what's too high. And remember, you go to the store, if the price, the retail price, high volume retail, remember shopping, auction market theory, if it's too high, I'm not paying that. Hasta la vista, we see you later. Well, that sets up the shorts. That sets up the ETH low. That sets up maybe a gap fill, or maybe not. That part, no clue. So what do we do with this? Well, if I test yesterday's low and I can't get inside range, I might, subject to my plan, think about selling it if it's my plan. Or I'm in my Barca lounger. I'm not doing anything. But let's come back to the open. So these are the things I know before the market opens. Okay? So I'm opening in a gap and, might fill the gap, might not, have no clue, and I have no interest in predicting what it'll do. I only have alignment and stops, protecting my account, being out of alignment, and change, and randomness. You want to be a trader? Guess what? You're in a random environment, and it's going to mess with you psychologically. So let's get back here. VHVN. Okay, so scale, now this is just my first trade. I'm not saying it's any good. It's just a trade. What do I know? Do you think I know? I don't know. Do you think I'm not a fortune teller? I don't know any of this. I do know this is too low. And if I think the trend is down and I'm in a key location, a breakout on a higher time frame, I'm going down here. So let's see. Get taken out. How exciting. Liquidity is over here. So I'm still working the shorts. And what I'm trying to do now is I'm looking, so I have liquidity here. I got liquidity there, and wherever it's going to go, it's going to go. I don't know. Watch. So this is short covering. This is called responsive buying. So I'm watching this. By the way, I took a stop here. Okay, just want you to know I took this right here. Got taken out. Very excited about that. And that's just trading. I don't know. Do you notice I'm somewhat detached? I'm detached because being attached to outcomes doesn't do me any good. Okay, watch this. So here's my liquidity. There's my sweep. That suggests a counter rotation. So that's the first piece. I now come back and test this. This is another area for me to be stalking a short. I get VPOC migration. Now I'm looking at, this is a potential structured trade right here. So I have this sweep, VPOC migration. Now this is a key piece. I do this all the time. It's either that, up or break low. And right here, this is my location. So I have this, and if this is too low, I'm going to break high. If this is too high, I'm going to break low. If I break low and I come back, now I have to see if I can sell this. Let's just look. There's a structured trade. Now, one of the things you have to be really aware of in this environment is high volatility. And this is something where trade plan comes in. If when you're in volatility like this, you cannot use fixed stop. You have to use structure, and you have to give it more room because of volatility. If you walk in here and you're using a rigid stop in a different environment of high risk, high volatility, you're going to be taken out. So this is called a variable high volume node. It's the retail price. Now, the thing about this is it changes. So what it's doing is it's tracking volume, and volume is shopping. Remember that. So right here is too high. Let me get back down here. And this was too low. So if I find too high, I have a couple things that can happen here. I can return to what was too low. Remember, shopping. So if you understand how to shop, then it's a matter of understanding what you're looking at and what it represents. Because most of you guys, I understand, you grow up on indicators, you're looking for some line. Well, the auction doesn't work that way. It really works just on volume. Because in your store, if something gets priced too low, it's on sale, it's going to come back to retail eventually. If it's too low, it's going to come back to retail. If it gets too high, it's going to come back to retail. It's going to return to what might be too low. If we don't clear this, then what happens? It's too low. If I break high and I can't get below here, what's it say? Too low, and now what? Squeeze a area. Oh, that's nice. Now what? What about this? Sorry, Tom. What about this? Random, Tom. Sweep. Okay. Heads up. Counter rotation. This is the area. VPOC migration. Right here. What's the possibility? There. Back to there. What's the possibility? There. Back to there. It's the same trade, isn't it? So right here. And right here is the teeth chatter, because if this is too low, I clear, I continue. Who knew? Or I break low. If this is too high and I have triggers, I have this is support right there. That is support. This is resistance. This is the what's happening. And that's exactly what it is. So if this is my support right there. And this is my resistance. So if I break high and keep going, under the bus. If I can get under here and hold this area right there, I can sell it. So this is a short for me. And then it's scaling under swings. So scale VWAP or mid, whatever you're doing. This is the target, there and there. Just saying. And don't forget, we have the ETH low, right? So that's where I was trying to go this morning. And then there's more. Really? Yeah, there is. Once I'm below here, this, I can sell this opening swing low. It's a structured trade. You have to be aware that what is here? Well, are these buyers? In other words, I want to get long, or is it shorts that are covering responders, and then the sellers who want to get out of Dodge, what might they do? Well, if we find too high, then these guys who have stops under here, the bargain hunters, that's okay. They're on the hook. Their stops are here. You take this out, you can sell this if it's part of your plan, and you still are working towards, and these aren't recommendations, these are just statistical probabilities. You're looking for this, and you got your liquidity hanging out. Then it's like you're riding a bull, You guys remember those bulls, right? So if you take this, where are you trying to go? Well, if you're coming down, you're coming to these, you're coming here, you're coming under the opening swing. If right here liquidity comes in, if you take a short on the opening swing, you have to get risk neutral, and all I can tell you is you're heading for the ETH low. If you come out above, your liquidity comes back in over here, and now you're in two-sided trade. If the trade becomes two-sided, it becomes something called mean reversion. If we think the trend is down, then it's only shorts. For me, I'm not saying you can do whatever you want to do. For me, I tend to just stay with what I perceive to be a dominant side. So if I come outside, what am I doing? There's stops here. What do I know now? I'm in two-sided trade. What else do I know? The ETH high was too high based on the auction. So am I going to be taking longs? No. At least I'm not. You can. I'm not saying anybody should do anything. Why? I got over a 91% probability, past performance not indicative of future results, to go there. Well, what about it? What do you think? I'm going here. So anytime I get taken out of a trade, and my job is to get risk neutral and scale and do my thing, if I come out here and I sell it, I'm going to come here, I'm going to come there, and I'm still looking for this. All shorts are going for this because of the statistical probabilities. Now, and then I have 30, which is this, previous, this is a high volume area. So this is my next area, okay? Let's see. VPOC migration, what's it say? Too high. Now, let's label this. Variable high volume node. What I like to show you guys when I do this stream is really I'm trading a process and I'm just waiting for the trades. And I'm trading something that has an edge. I'm not trading certainty. I'm certainly don't know what's going to happen to any individual trade. I'm completely clueless, but not ignorant. So let's look. Here's what I see. I have liquid. So anyway, short, going to, the idea is to get here and there. That's And that's all posted in TraderLab. Now, doesn't mean it's ever going to get there. That's not trading. It's possibilities. I get a sweep here. Liquidity comes in the book here. These are buyers. Now, I don't know, what's going to happen. There's my buyer. Okay. Now what? Well, I know that's too high. I know this. Here, let me bring you back here. Let me show you something. This is how you might use the profile. So we don't know, right? Whatever it's doing, it's doing. Right here, you see this move here. Now, nobody knows, at least if you do, DM me because I'd like to know. So all I can do is align, manage my trade, and accept I have no control over the participant behavior. I only have control over my behavior, and my plan tells me what to do. That's already worked out. I never ask myself what I should do. I can't ask myself because in the moment, I cannot ask the question because then it's fear, uncertainty, and the lunatic is in control now. I'm not. Okay? So it's really important to know what you're going to do. That's what trade plan is. So I know right here, if I'm under this is resistance right here because buyers were here, sell stops are coming out, and the sellers overtook the buyers. So that's selling pressure. So now I have resistance. Buyers, right? That becomes resistance. It's right here. So I'm managing my trade here, just telling you, and I'm just going there. That's my orders laying out there, and whatever it does, and then 30. So come back across the range, and etc. I just want you to understand that I don't know what's going on other than my plan. I know what my plan is. I don't know what the market's doing or will do. I do know I have to be very careful of a gap fill, right? Because the probabilities, but it never has to. So this just sets up more shorts. This time you get it. Now I put my order. Now I see all this sitting here, and I see this liquidity front running. I see the sweep here. I'm not going to hang out. I see this right here. And I have a sweep, and I'm looking for it to come here. My order is actually sitting like right around here, and I get this. So now here's my choices. I can cover right here, right when it takes this out, right this, and forget it. Or my stop, and I'm giving you the or because this is time frame as you think of it oriented. Okay. By the way, there's another little piece here. This is too high. And I was going to show you something else. There's something over here called an outside edge. I multitask. I'm not good at it. So if I'm streaming, my brain is jumping all over the place, with stuff I want to share with you. This here is called a low volume area or low volume node. What it represents is, if this is the high volume or retail price and I leave it, this is the outside edge. That was created by this acceleration up. So the market found too low right there. Okay. Oh, it's on sale. And now the shorts in here in this whole leg get squeezed. Remember, the market goes up to go down in all time frames, goes down to go up, and goes up once it squeezes to go down, and will go at some point down to go up, in all time frames. So anyway, so right here, this is an outside edge. And what it represents is us falling out of this volume. Once I'm under here, it's now the language of the market is saying is this might be too high. And now we're starting a new distribution down here. So now when I fall out, I can sell this. Buyers were here. break low. This is a trigger if it's in your plan. This is a trigger if it's in your plan. Break low. You could sell that. You have to get risk neutral. You have a sweep right here. You come up. If you get taken out, for me, if I put these trades on and my goal is to get risk neutral, I don't micromanage. I will not put my stop there. I won't, because everybody else has their stop there. I move up, and it's not a recommendation. I move further away. I want to be behind where the sellers took control. I don't want to, I don't want to be over here. I want to be a little further away because the market can come up into stops right there. I'm not putting my stop there. Now, what is the result of that? Well, I take a bigger loss, or I don't get taken out of the trade on a stop pick. In fact, I might add here if it's in my plan. Now, let's look at something else. Now, the question you're going to say, because you're risk adverse, I understand. Is what's the right thing to do for your stops? Okay, this is a question for this astute group of traders. Minimum, so I lose as little as possible because I'm risk adverse. By the way, we all are naturally. Or do I do statistics, and over time, even though if my stop is further away, I'm going to take a larger loss? What happens over a large sample size based on my trade management? Do I stay in more trades, get more gains over time, or do these larger stops cost me? What do you think the answer is? You need the answer for you, not my answer, your answer in your time frame. So let's look. Liquidity, mid VWAP resting liquidity. VPOC migration, one moment. ETH low, resting liquidity. Next target is 30. VPOC migration. Uh-oh, now what, Tom? Well, what's above us might be too high. Where's my outside edge? It's out here, right? What was this, Tom? What is that? This is a TraderLab short. 2 there. And then you're trying to, for me, trying to go to 30. Okay? Where does this thing fail? By the way, does it fail there? I mean, up to you. Or does it fail further outside? What about this liquidity coming in? What about that? Now let's assume, that you take this, maybe, because it is a structured trade, and this is the scale. This is VHVN, as I call it. It's a migration trade, I call it, to there. So, I'm not paying that. That's too high. Well, that's fair. Here. So if I find too high, I can come there. That's what I know. I also know my buyers were here, right? There's my sweep. There's my liquidity. What might I do with this trade subject to my plan? Short, scale, hold. Or short, scale, if I'm on a 2-lot, trade management. You see, either one. Okay, so subject to. What about this, Tom? You get picked over here because you're hanging out and you're micromanaging? That's okay too. What happens here? Let's watch. Liquidity comes back in. What do I know? This is the retail price. And where am I? This is an outside edge. This is an outside edge. That's all I know. I don't know anything else. Wish I knew. I don't know. So I don't think about knowing. What I think about is understanding, not knowing. There's a big difference, isn't there? Let's draw a little line over here for an astute group of traders. So this is too high. This is where my sellers were right here. My sellers took over there. Buyers are there. Trigger is there. This is resistance in here. Break low, trigger, short, whatever, up to you. VHVN short to there, looking for, this is resistance, it's right there. All these are potential shorts subject to your time frame. You get taken out, welcome to the club. Where's the next resistance? It's here and here, and I have my liquidity. So right here, no clue. Okay, so if it comes out here, you're looking at VWAP and mid for a reversion trade to come here. So if this is not your trade, no problem. Where might your trade be? Might it be here? The buyers are here, the sellers are there. Who knows? Break low, trigger. So where's my locations? There and there. That's what I know. I don't know. What do you know? So none of us know. I don't know. So I'm okay selling this. Stop has to be there. And now I know my buyers were here. So I have to scale here. Why? Absorption. Buyers. If I'm going to put a scale in here, which I have to do, what do we know here? Buyers are there. What do we know here? Buyers are here. If I know I got buyers, where are you going to scale? Minimum, you got to get risk neutral, but you got to definitely, in my opinion, again, definitely is probably not the right term. You got to follow your plan. But if I know there's buyers here, I'm scaling. I don't know about you, because why? I anticipate, but I don't predict. I anticipate that I will get buyers again, and there they are. There's the icebergs, except this time I get below the buyers and I'm under the ETH low. What does that do for me? Sets up 30. Now, 30. So that was the next target for me. And then this, I have no idea at this point. So 30, and now I'm looking for continuation shorts. Let me show you. So this, let me put a little box around this thing. So I know what, the old concept, what is support can become resistance. I can sell this to 30 if it's in my plan. This, no clue, because for me, I'm looking for it to go, where is it? There's a location somewhere here, I think. No, let me get my higher time frame back here. Let me make sure. Yeah, 66.97 and change. Not a recommendation. 97. Whoa. 97.75. If we haven't been down here in so long, I don't have these current. So that's a target, not a recommendation. It's a retail price, and I'll show it to you just in a second, that we left behind last time we were down here. It was, what? Too low. If it's too low, how does the market work? We might come back and revisit it. Or not. I don't know. This is where this comes from. This day over here was the fair price for this day. That was too low. You see? Oh, it's on sale. It's on sale. It's on sale. It's on sale. Next place it was too low. Up here. What happened here? I didn't get back. Too low. What happens to the shorts in here? Have you seen anything familiar? Open low, squeeze, 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 gap, squeeze. Does this look familiar? So when we were coming down here, this was the key level of support. This out here. If we get under here, then we can come here. If we come back inside, we might come back, and I don't know. So for me, it was just shorts. Now, is it going to transition? Now, hindsight says, yeah, but at the time I have no idea. So I don't know. So I only keep trading in what I perceive to be the primary context until it changes. Now, there's another piece here. At 9:30 my time, which is Central Time, there is a 98% probability we take out the first hour's higher low. Since the trend is down, in my opinion, at the time, this has a 98% probability, and I have that other target open below. So I'm still on the shorts. So what I know is right here, this might be a short. So I'm looking at this right here for a continuation short. Let's see what it does. I take this short, so I get my sweep. I have my location right here. This is a trigger. This is my entry. And then I have to get risk neutral, which is no problem. And then I'm going for this and out the bottom. Okay, so this is a short for me. Not saying it's any good, just saying it is what it is. And I get taken out over here. Once I come back here, I'm then going to start looking for reversion, because what I'm doing is now I'm no longer directional, what this is, and now I'm in a reversion. In other words, I'm changing from direction, and I don't know till hindsight. So there's no way to say it is. It's always maybe. And over here, maybe we're going to continue down. Test the ETH low. It's a low volume area. We can just come out here and, keep doing our thing. And I know this is my next target, 98%. Okay. So anyway, this was a short. This, I come back here. I took a short here. This is a trigger. Again, just take the short. It's a 10-point rotation. I get my scale. I see my sweep. So, and I know if this is too high, I can continue. If it's not too high, I can come across. That's what I know. I don't know anything else. Let's see what it does. Now, let's look here. What I know here is, right here, I found too low. Now, in the way I think about these things, is it too low forever, or is it just a rotation? If I have this, then of course I can sell it and looking to come back and check. Okay. If I have this, I can sell it, looking to come back. Same trade, okay, just different location. So at this point, so this is a short looking to come down here. But let's look at what we know on this side, on the other side. So what I know is resistance, resistance, support, resistance, support. Break high, resistance, break high. What's this? So I'm moving up to resistance, and I have my sweep. Let's look at the behaviors on both sides. Sweep here says potential rotation up. Sweep here says potential rotation down. You're going to say, Tom, what about this? Sweep here, liquidity, potential rotation up, location, location. What about this? Let's say, well, let's come down. Sweep here. What does it say? Potential rotation up. You see it here? Potential rotation up. What happens if it does the opposite? Break. I can sell it. What happens over here? Sweep. What does it say? Rotation up. What happens if I break below it? I can sell it. See? Not saying it's anything. You can research this. This is more advanced order flow. Okay? So what do I know? Resistance might become support. Support is support. So, and I'm going for this. All right. So anyway, these are shorts. These are advanced. They should not be part of your trade plan unless you could do something a little more structured. Now, resistance, right? break high. So this sets up another area. There's liquidity, and I'm trying to come, and where's my support? My support's here. So anyway, this, so there to there, there to here, get taken out again. All right. So at this point, I'm kind of going, well, and then we get this. So once this happens here, and I see the buying, now I'm still watching for sellers, but let's look at what we see. Where's my sellers? Now this I haven't seen, but I could tell you here, once we start coming across the range and I'm no longer reverting, then I know where my stops are. They're going to be at the IB high. That's what I know. That's all I know. Don't need to know anything else. And then I have the gap, and I have, don't forget the probabilities. The probabilities are to get the yesterday's low and fill the gap. Okay, so this is where I'd be going. Now, no longs for me. So now, subject to what happens in here, I may either, and I'm saying, because I don't call trades, guys, and I take stops, what's new? I may take a short to come back, or I'm off shorts and I'm in the Barca lounger until I see the behavior. Can I get traction up inside yesterday's range, or am I only taking out, squeezing the shorts? And now if I can't regain yesterday's range, other than, tickling the buy stops, then I might, subject to plan, look to fade. Now the VPOC has migrated up here. That becomes, if I do take shorts, this is where I'm going to try to go. And there's no way, or depending on the behavior, I have nothing to do. I can't tell you what, because I can't see what's going on right here. But this is important. What happens over here, let me get this back here, is very important. So we have to see the behavior, and do we keep squeezing or not? So currently I have nothing to do other than hang out and wait for a trade. And if I don't have one, then that's okay. See, the thing about this, guys, is your job is not to try to catch every rotation. Your job is to already know where the trades might show up. So I know I might get a short up here somewhere. And this is where it would come. It's called mean reversion, and it's an aggressive trade. So this is, and notice we have a sweep. So we have sweeps here, sets up the counter rotation, and we have a sweep here, sets up the counter rotation. So there's really nothing for me to do here, I'm not any good at picking the high or low of anything. It's not my job. I don't do it. Because I only know in hindsight, so I don't know. So up here. Now here's something else to think about. If the longs in this market, where would they be taking profits? Wouldn't it be on a gap fill? What do you think? So if I anticipate that and I see the sweep, this here would be, depending on what you define as time frame and trend, a short. And then you're going to try to get risk neutral, and then the idea is to come down here. If it doesn't do that, depending where your scale is and your risk management, you might take a stop if it takes this out, but you'd be trying to come here. This might be counter trend depending how in your time frame. For me, this is very important. If I can't, other than squeezing out shorts, if I don't get buying above here, then this was just a squeeze, and I won't know until hindsight, but this is what would be where I'd be trying to go. This area, okay? So if I took a short, it'd be risk neutral, and then it's, either come across or get taken out. And let's see what it's doing here. There you are. So you'd be risk neutral here. You have your sweep. This is a good, for me, a counter rotation. And I know I'm at a critical area. If I'm going to put a trade on, for me, it's going to be at an important location. What happens? I have no idea. So I don't sweat that. What I've found is that my worry or fear doesn't change anything. In other words, if I'm fearful, I'll still take a stop, and if I'm fearful, I'll get my target. What 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 am I supposed to quote feel? How about nothing? Now, let me define what nothing means. I still feel it. And I probably should say, what should I do about my feelings? Nothing, because they have nothing to do with it. Your feelings, your emotional states are a problem. They're not a solution for you. They don't help you. In fact, it might be one of the biggest problems for developing traders. I'm still looking at this up here, not a recommendation. Let me try to take a look at things here. One moment. I do see some selling here, you know. Now, what does that mean? Let's see. Trying to fix something here. Hold on. 68, 67. One moment, guys. I have a little problem. Okay. Still got a problem. Got a problem with a chart here. One moment, guys. You'll notice we're still down about 90 points. I don't know if I'd call that a bull move. What do you think? Oh, still having trouble. I don't like having trouble. That is a short, guys. That's all I can tell you. All right. Sorry. Trying to fix trouble here. Okay. So this is, remember, I'm trying to get short, right? Wow. I'm having some trouble here, guys. Just hold on a second, okay? Some computer problem here. How you guys doing in YouTube? Hope you're doing okay. This is the TraderLab. No magic in trading. I guess maybe we'd said a TraderLab, we should have said magic in trading, right? But there's no magic, and there's certainly no certainty. How about this? The only thing that's certain is uncertainty. So where is the outside edge? That's where your uncertainty is. I don't know where it is. I can be selling this and take stops with the rest of you. What's the big deal? Other than my emotional attachment. What is this? Isn't this the same trade as this one? It's just, where's the outside edge? It's just random. So if I come up here, I can sell this, and I'm going here. This is my trade. This is called mean reversion. And I always say, yeah, it's mean. What's mean about it? Where's the outside edge? You know, what about this? Wasn't that reversion? What happens when this shifts? Either I reject it or I push high. If I push high, then what? Well, if I think I'm in a bear market, maybe, I don't know, not concerned about it, I can sell this and get risk neutral. If I get taken out, it's the same trade. I'm trying to go here and down the financial food chain. Why? All I did was fill the gap. Take out the weak side. Does that make sense? How are we doing in YouTube? Everybody conscious? Always got to check on YouTube. I hear the thuds on the desk, and I get very concerned. Let me get back to the chats. I lose the chat. Sorry, guys. Thanks, Stephen, for putting that all in there. How you guys doing in YouTube? Ben, the opening swing low is really just, in other words, think about it. If you get short covering, and let's assume this might be bearish, subject to time frame, no longs for me. Now, everybody's going to say, look, you could have done this, this, and this. Well, in hindsight, I could sell the high and buy the low. Still not working on that anymore. You guys keep working on it. Me, not so much. So I pick what I perceive to be a dominant side. because I want to align with a higher time frame. I don't want, I'm obviously a day trader and I'm trading the rotations, but think of this like a vertical integration of time frames. I'm going to try to align with a higher time frame because the higher time frame is where the range is going to come from. This kind of stuff, squeeze is squeeze. And I don't know. That the low of the day could be the low of the century. Do you know? I don't. So since I know I don't know, all I do is I tried to get in alignment with what I perceive to be a dominant side. And then I take my trades and my stops and let it go at that. I mean, what else are you going to do? What do I know? I know 6802 is an outside edge. So that's called a composite low volume node. So think of it like shopping. And there's no precision in this. Remember how this might work. Yesterday, this is an important area. It's too high. I completely reject it and I get under here. This is not good news. If I get under here, this is support and this is my target, and it's also towards an outside edge. This is on the hip parade. I couldn't tell you when. It's not my job. I also know what's my probability of filling the gap. Getting to the previous high or low is 68%. Closing the gap, 68%. I post that in TraderLab because I said, what have we not done? Now that sets up a couple scenarios. One is we never filled the gap. Okay, gap and go after a little counter rotation, so shorts, or fill the gap. Then what? Do we get inside yesterday's range and continue to squeeze the area? Or if we only squeeze the shorts, which is what is happening in all time frames, shorts, what do? Squeeze. What happens if we run out the buy stops and we don't have new buyers and all we did was squeeze? Does that give you an opportunity for continuation selling, or should you be long? What is it? Well, I don't have the answer to what, quote, you should be. I only know what I'm doing because I don't want complicated. It's already random, so I'm very much structured. I just go, well, what can it do? Well, it might do this, it might do that. How's it going to do it? No idea. Random. Okay, where's my next trade? Well, short from there to there. Then what? Well, either down the financial food chain or this is too low and I come back inside the range and that's that. Is it any more complicated than that? What do you think? Now remember, let's redefine complexity. It's randomness. It's not complicated. Redefine what is going on here. It is not complicated. It is random. So if you can understand and read, and it takes time, believe me, and you don't start with all of this, you take components. You would know that if we fill the gap and get the stops and we don't have buyers above here, then who were the buyers in all of this? The shorts. They got squeezed. And what else do we see? Sellers, 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 sellers. You see them, the icebergs. Sellers, sellers. What does that do? If my buyers can't, it's Pac-Man. If my buyers cannot consume my sellers, and you will be fooled, so let's get over it, I can sell this to go there. That's called mean reversion. And I always say in TraderLab, what is the primary behavior of the market in all time frames? Reversion. It's always coming back to check a price. So if this microstructure is too high, by the way, if I sell this, my stop is not going there. It's out here or even there. Okay? Because I just don't do it. Why would I do that? Because that's what retail traders do. Remember, think like a retail trader. Don't act like one. You need to anticipate your urge. In other words, when you feel, and this is what we all feel, by the way, Me too. I feel like I don't want to lose one tick more than I need to. What is that about? Now, but my plan says don't put your stop where everybody else does, because that's liquidity, and the market tends to go to liquidity. And if I come up here and take these guys out, this or this, do I want my stop there? Well, that's where the other stops are, the retail traders. No. So if I sell this, I am going to try to come down here, and I'd be risk neutral. If I'm sitting up here, I'm still in the trade and risk neutral. Or, let me give you the or. My stop is still out there, and now I'm scaled because it's mean reversion. The thing about mean reversion is where's the outside edge? That's the mean part, you say. So I'm only staying on one side, and it doesn't even have to be the right side, because if I get taken out again, I'm already got a profitable trade going. And then it's like, okay, now other than just filling the gap, I'm coming back in the range. Now that would change things for me. Then I would just be done until things change again. So that's just the way I operate. And I want you guys to understand, it's not that this is, quote, the best way to do anything. It's just the way I do it. Because I'm not looking to be flip-flopping. I want to be intentional, and I anticipate my trades. I'm not trying to go, oh, should I buy this? Oh, maybe I should sell that. As soon as I put my brain in that, I'm going to end up thrashing. And I don't want to do that. So what I want to do is I just want to stay with what I perceive to be the dominant side. So intraday, we have a short squeeze. But what do I do with short squeezes? For me, I want to use them to get back in alignment with what I perceive to be the dominant side. Your time frame, the longs might be the dominant side. My time frame, it's the shorts. Now, if I push back into range, that's fine. Then I don't have anything else to do. I just hang out and wait for another opportunity, or I'm done. It just doesn't matter. Does that make some sense? Now, the high of the day is not a strong high. I don't think. I think we have a double top up there, don't we? Can't tell. I really don't know. Is it? Is it not? I can't quite see. Is that a double top, triple top, multi-top? What do you got? If it is a double top, that's a weak high, or a triple, whatever you want to call it. So all this is exhaustion. So I can trade the rotation, but if I understand that this is weak, these are exhaustive structures, then this can easily get squeezed. But anyway, this is the target on the short, okay? Yeah, Patrick, it is? Okay, thank you. How we do it in YouTube? I keep losing the chat, so I'm coming back to take a look. So this is a weak high. So this, knowing this is a weak high, this would be a good place right here. Well, subject to your plan. If this is a weak high, then you could be done with this thing, or you're trade managing and you're out, and that's that. So nothing more. Something is alerting somewhere. Okay. I'm back inside where I broke out, so I have nothing here at the moment. I'm back over here, so that there's possibilities to come back inside here, and I can't tell you where. I would be looking at 68.40 as a high volume area, so this would be an area to look. I have nothing to do now, so I can just be done, for now, and I just sit and wait. Remember, I'm a bit different probably than a lot of you guys. I'm very patient. I don't have any need to trade. I just need to take my trades that are in alignment, and then if alignment changes, I just back off. This is my last shot for the short right now, this, because that's too low. If I find too low and this moves, if I can't get under here to go there, which would be this trade and here, then if that's now too low, then I can come back and continue. That's what I know. So I can, when I put this trade on, I know this is my primary target. This is the reversion trade. And again, if it's not too low, if it actually, I should say it is too low, and this is too low, then I can continue. So that's the end of it. So for me, this would be the last short. This and this. Two shorts and two profitable trades, you know. So I'm still okay with that. In my time frame and my plan. Not yours, mine. Again. Does that make some sense? How are you guys doing? How's YouTube? Is YouTube alive? Again, I heard a thud. Somebody's head just hit a keyboard. So let's watch. Notice where we are. Notice I'm getting the sweeps. Notice the liquidity is coming back in. We have a weak high. So we want to see what happens right here. There's my sweeps. So we got to watch very cautiously and very carefully right here. This could set up a short rotation right here. It's not a trade recommendation. I'm just reading the tea leaves. Let's see what it does. Now I know there's stops here. So wouldn't you think that getting short right here is very risky? What do you think? Is it going to counter rotate from here? What do you think? Let's see what it does. So if we see a selling opportunity right here, maybe, or let me come back, but we're right against the current high, would you take this short? Is this a structured trade for you? Or is it a trade you don't take? This is the location. Let's just look at it together. And again, these aren't trade recommendations. This is all about structured trades. This was the last short, right? Where's resistance? It's here. Where are the stops? Right over here. Where might this go? Now, this is not a trade I would take. I want you to read it. I sit here and I read trades, and if they don't fit my plan, I sit here and I bite my nails. And I go into the, gee, if it only had done that, you know, well, it didn't do it, so that's life. And it doesn't matter that this is the target and so is this. It just doesn't matter. So, sweep, location. See? Then what? Squeeze, which is more likely because of the weak high, or back here and out there. Which one is it going to be? Isn't that an interesting question? John, I don't show the NQ here, but it's the same. In other words, what I'm sharing here in the stream, you know, you're asking me about NQ. What you see here applies to any market. This is actually how markets work. And you can plug any market into this process, but you do have to vet it as far as the volatility, the depth of the limit order book. All of these things have to be adjusted. Like NQ, you know, that thing, you know, we call it the snake because it's thin. So you're going to get skidded on stops. It has the volatility. So for the stream, it's ES. Because if you can trade, the ES has the depth. It's very helpful for developing traders. Because not only do we all take stops, but when you go to NQ or gold or any of these thinner markets, you're going to get skidded. So really your risk cannot be managed as effectively. So this is our weak high, right? So that's why this is not a short. But now we want to watch. And I'm not any good at picking the high of anything, okay? It's not what I try to do. But what I do try to do is I try to anticipate behavior before the market gets there. So I'm looking at this for a reversion. Now, whether or not it's going to happen, so let's watch. I have my buyers up here, so I'm still watching. Boy, I'm still having a chart problem here, guys. Sorry about this. Trying to fix something here. Not very fixable. See if I can get this working. Well, yes. All right, I still see my buyers. Let's see if we can get some sellers in here. So I'm still seeing the buyers here. I've got my sellers. I got my liquidity. So this is a suspect. I'm just watching it now. I'm not recommending trades. I don't do that. My buyers are still driving here. It looks like when I say driving, I mean driving the bus. And I've got to look to see now if they can run out of steam. This is very important. There's my sweep. Okay, see how the sweeps work, and then I might get a reaction. I have a sweep, I have my location, and this is all very interesting right here. Let's just watch it. I don't call trades. You don't need to take my stop. I take them, you take them. What's new? I still am seeing my buyers in the delta. They are aggressive here. So I have buy stops going off here, and I got icebergs. So what happens? Do my sellers take over, or is it just my icebergs are absorbing, which is what is happening here, and are my sellers going to overwhelm my buyers? So I have buyers are here, there, and my sellers are here. So you got buyers and sellers. Now we just have to watch and see. Let's see what happens. These are not trade recommendations. All I'm doing now is reading the order flow, and I'm still at an important location. There's no precision in this. So I'm going to watch the liquidity over here. What does it do? Notice this liquidity is still came back in over here. Think of this like the invisible hand. So that puts some pressure. Now as the market, watch, as the market comes back up, does this pull or do they come down to meet it? That's going to give us a hint underlined. I'm still seeing the buyers, but they are being absorbed. You see? Okay, we have some sellers right in here. Sellers are below the buyers now. So I got buyers here, I got sellers there. This is my little sandbox. Now up in here, and I'm not seeing strong selling at the moment. I am seeing some selling, but I'm not seeing what you call a runaway freight train. So what we have to see is on these counter rotations, you notice the buyers were here. Do the buyers and the buyers were here. So this is my support. That's my resistance. So I can look at, so the buyers are there, the buyers are there, the buyers are there. So I want to see what happens if I come down here. I'm seeing my sellers now. Okay. So you can see the sellers were absorbing here. The buyers tried here, not so much, and we were looking, because this is really the important thing, what's happening here. And then this is where you would try to go. It's the same trade. This is called mean reversion. So, to there, back out, and then possibly to there. You have to get risk neutral. We're at a very important location. And if we continue to come in, then, that's that. So for me, not a recommendation, it's just shorts. That's all I can tell you. And these aren't trade recommendations. I'm clueless, but not ignorant. So I'm just giving you an idea of a way to approach this, you see. Does the two layers, I'm getting the question from Greenhorn Bull. Maybe we should change that to Greenhorn Bear. Do the two layers of liquidity part of what I view? Yeah, absolutely. Um, I, liquidity is an important part. Liquidity doesn't have to trade. When this comes in the book, one of the ways to think about it, I always think of it kind of like the hand. It's like pressure. So when I see this, so here, this is my sellers, and you could see, and this came in here. Notice what comes back in as we approach it. Remember where the sellers were? There, there, and there. Now I break low. Well, gone. I don't know. As I come back up, I get seller here, go through it, Pac-Man. Where's my next sellers? Here, same as there. And then these guys come back in. Here. Think of this almost like a backstop. Baseball, American baseball. Now, I don't know. Remember, the thing about liquidity, you're like stepping on a banana peel. What happens if they pull or they pull? Then this is a trap. Then it's gone and we go up and we squeeze. Part of that randomness. So here, now let's look at the components of this. Sweep, location, think real estate. Now I understand it's near the high of the day. It might not be your thing. Doesn't need to be anybody's thing. It's a trade I take. I'm not too concerned. I take my stop and I forget about it. My thing is that I follow my plan. It's not the best plan on the planet. I don't know what is. It's just my plan. My plan says if I can't do this, then that. If this is too high, then that. And I already did it there. If this is not too high and I don't get under here, then I can squeeze. That's what I know. And it's probably the same thing you would know. So if that's what we know, then that's it. What else is there to know? Do you know? I don't know. So for me, and then, or not, and then it doesn't matter. It's just remember how the business works. It's a random distribution of outcomes of edge. So as a trader, it's not about your fear. I mean, it is, but that isn't trading. That's just your fear. Trading is sampling an edge and do it as many times as you can, because every time let's go back to the gaming concept. Every time they play blackjack, because there's somebody sitting on the other side of the table, the more times they get to deal the cards, and the more dollars that are placed on the other side of the table by the gamblers, the more opportunity the house has to extract that edge over a random distribution of outcomes. So for me, in spite of my fear, my job is to take the trade. It's the only way. And if I'm not going to take the trade because of fear, who now has the edge? Me or the gamblers? Well, I'm skewing my edge towards them. So I may still have my winners, but the trades I didn't take, I'm now moving away from my edge and I'm skewing it towards the gamblers. Why would I do that? My fear? My need for certainty? This thing about being right? Well, if you're in an environment where that doesn't exist, what are you doing that for? You're doing it because of your primal wiring. So to be a trader, you need to understand the business. It's not what you probably think it is. It's not being right and predicting and knowing anything. Wouldn't it be better to know you don't know? Doesn't that remove a lot of the emotional noise? And to get to a place of knowing you don't know means accepting randomness. So that is really your ultimate obstacle. I believe that anyone who comes to TraderLab can learn how to trade if they do the work. And of course, trading is not for everybody. But the biggest obstacle you're going to have is not learning how to trade, in my opinion. It's going to be learning how to execute an edge when you have uncertainty. That, my friends, is what will take you out of the business. You can have the best plan on the planet. If you can't execute it, you can't extract your edge, and you're on your way out. If you want to create a potential career path, that's what I've shared in TraderLab. I'm doing this 47 years, and I would have to say probably everything you've done, I've already done. So it's not about being right. There's no holy grail. There's no secret sauce. There's no only one thing you need, and now you move the ATM in the basement. Let's get over it. Let's not be naive. Let's get down to business. If you're interested in the business of trading, use the link in the bottom of YouTube. Visit the TraderLab. There's no cost for it. It's a community of like-minded traders who've come together to leverage their collective experience. It is specifically about the business of trading. If that's your thing, feel free to visit. This is what it looks like. There's a lot going on in here. You're all welcome. It's a community of traders. There's data mining going on, mutual support, psychological support, and camaraderie. It takes a community or a village to get the most out of this. No one understands trading unless you've been in the business. Otherwise, it's just fantasy. One thing about the TraderLab, we work on the reality and working in randomness. Please don't forget to give the like on the way out. Thank you so much for visiting in YouTube. Look forward to seeing you guys tomorrow. Be sure to review all the streams. They all build on each other. And of course, this is really about the business of trading. If you're interested in that business, visit the TraderLab. Thanks, everybody. Thanks for visiting today. Look forward to seeing you soon. And don't forget that like on the way out. And subscribe so you get notifications of other opportunities to expand your education.